Hi, good evening. This is Neil Yan. This is thetaxjournal.com, and this is for purposes of accounting 452. This is an illustration of a disproportionate redemption so as to assure that it qualifies for sale or exchange treatment. This is governed by what I'll call Section 302B2. We typically call this a B2 in our field by way of a disproportionate redemption, and there are two key features to assure that you will get sale or exchange treatment so long as you qualify for two key items. One is that after the redemption that you own less than 80% of the original ownership, and then the second requirement is that you have less than 50% of the voting control. So let's do this. The best way to truly walk through and appreciate the text of the Internal Revenue Code governing this section, that being 302B2, is to do an illustration. So let's say we have three unrelated shareholders, and I'll footnote why I'm so emphatic about the unrelated, the term that is. We have Bob who has 30 shares, we have Barb who has 30 shares, and we have Carrie who has 40 shares. So the total number of shares outstanding is 100. And let's say the company has passed a resolution and it agrees that it's going to redeem 20 of Carrie's shares. So Carrie says that's great. Carrie will want to qualify for sale or exchange treatment so that this will be treated as capital gain to her. At the end of the day, if the company is redeeming 20 of her shares, the total shares outstanding then is going to drop from 100 to 80, correct? So before, Carrie had 40 shares of the 100. The numerator is 40. The denominator is 100. She has 40%. After, Carrie's now sitting there and you say, okay, she owns 20 shares, but how many shares are outstanding? Well, there's a total of 80 shares outstanding. So her percentage of ownership is down to 25%. So she has gone from 40% to 25%. What is the test? The test is she must have less than 80% of the original ownership. What is the original ownership? Well, to get less than 80% of the original ownership, you're going to take 80%, multiply it by 40%, and that will get you 32%. Does 25% ultimately come below 32%? Sure, so she qualifies and will receive sale or exchange treatment. What was the other requirement that we need to make sure we note? That she has less than 50% of the voting control. That being the stock for all intents and purposes that runs the corporation. Well, we see that that's not an issue. Initially she had 40%, well she's down to 25%. We don't necessarily have to fret over that. One of the key important points that I want to draw to your attention that you need to be aware of is, let's say Carrie and Barb were related, and Carrie was in fact Barb's mother, or vice versa. One of the things that you need to be cognizant of is the 318 rules. Now, I'm not going to go into detail on Section 318, but depending on the circumstances and the relationship, Carrie could ultimately be deemed to attribute it to owning Barb's shares. So when you run through and do all these tests, it wouldn't be 40, but it'd rather be 70. And then after, well, if she's deemed to still own those shares, after is 20 plus the 30, you can get an idea of 50 over total shares outstanding 80. They don't pass the second test on the control. You can tell that at first blush. You need to be cognizant of 318, but this is a mere illustration of Section 302B2, disproportionate redemptions. Note, if it fails to get sale or exchange treatment, it's going to be treated as a dividend. Changes the entire tax impact to not only Carrie, but also the company. Thank you.